Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor, and in today's video it's one for the property guys. We're going to be talking about the recent report from Nationwide. Came out today. We're filming this on, what day is it today, Nick? Yeah, we're filming this today and the report came out today. You're going to be seeing it on Friday, but house prices up again 0.7%. What does this mean? Where are we at with the cycle? How are things continuing to rise? We're going to have a look at some of the data behind it. I'm going to make sure I give you all the information, a bit of my perspective on what's going on. But house prices up again. If you're a property owner, you're winning. Guys, let's go to the whiteboard. Let's get into it. So guys, welcome to the whiteboard. I know it's Friday. We normally go on a bit of a road trip and have a look around a property or something, but today the report from Nationwide was released and I thought it was super important that I brought that information to you and my perspective as soon as possible. Now before we get into any of that, if you could possibly give this video a big like, it massively helps me out with the algorithm and it means other people can get access to this sort of information, and I think it's key for people's growth. On top of that, if you haven't already subscribed, please consider subscribing. We give away the dividends from our subscriber portfolio every month, so subscribers are getting cash every month, and on top of that we're hoping to give away an investment property in the next year or two. So guys, no reason not to subscribe. Hit that bell notification and let's get into the video. Nationwide have been a benchmark of providing data when it comes to property prices, and Nick just put the picture up there somewhere, and I'm sure he has right now, and there's a lot of takeaways. I'll also put a link to the full report down in the description, but ultimately the average price in the UK has risen in the month of June versus May, i.e. in the last month, by 0.7%. So that's a big rise on the average house price. It's gone up from 242,832 to 245,432. That's an average increase of nearly £3,000 per property. So if you're an average property owner in the UK, last month your property made you £3,000 in capital appreciation. Fantastic news. Now in terms of the year-on-year improvement, that's a 13.4% increase since June last year. Now granted, we were dealing with the height of pessimism last year in June, and right now we really are getting the economy back on track. So I think there's lots of reasons behind why this optimism is coming through in property prices. There's the stamp duty holiday, but that's due to finish at the end of this month. There is ultra low interest rates, and that is supporting the fact that the mortgages are extremely affordable. And if you read through the Nationwide report, they really do highlight the fact that mortgages are still very, very affordable. And for me, I think that's one of the most important things when we're predicting what's going to be happening next with house prices, and why I believe they're going to continue to rise for the next 4 or 5 years. That would also be in line with the 18-year cycle, coincidentally. However, this video is more about this report and the data held within it and what I think that leads to in terms of looking forward. So in terms of mortgages, I think they're still very affordable as well. I was looking at the average house price at the moment, $245,000. It's still not that expensive when you actually do the mortgage calculations, which I've done on the other sheet, but I want to come to that in a minute. Before I talk about the mortgage payments, what I also want to do is say that for people like myself who've got big portfolios, I've got about £3 million worth of property. Last month, my capital appreciation would have been somewhere around 21k. It's coming off the back of last month when my capital appreciation would have been somewhere like 51k because it was about 1.7% in May. So for me, that's £72,000 worth of capital appreciation in the last 2 months alone. Now, this really does highlight the difference between the people who've got and own the assets and the people that are getting left behind. But this isn't a new phenomena. This has been happening for decades, and it is just part of a game. Inflation means that the money that you hold becomes worth less over time, and assets continue to increase in value over time. And I think it's really important that you just understand the game and then decide how you want to play it. For me, I'm playing it 3 ways. I'm playing it first of all through property. I'm investing, I'm creating passive income through that. I'm playing it second of all using index funds, where I'm buying buying baskets of companies and they're inflating in value. And number 3, I'm doing it with businesses that I own and control. So for me, I've got a 3-pronged attack, and I really think that everybody should sit down and get really serious about how they're playing the game. The game is very, very obvious. It's been the same forever. Buy assets, you get wealthier. It's no more complicated than that. Let's go on to why Nationwide are saying that they're likely to see house prices continue to rise. And I think that that's true. If we look at interest rates, which underpin the mortgage rates, they're currently at 0.1% from the Bank of England. Now, that means at the moment you can get a sub 1% residential mortgage, which is ridiculously cheap. It is a record low. So what does that mean in reality for somebody buying an average house right now? And remember, we're talking average, not a starter home, not the first house you're buying, an average 3-bedroom semi-detached property. So for the person buying an average house, what that means at the moment is they would have a mortgage of £220,500. And on a repayment basis, if they were able to secure it at 1%, that would be £831 a month. At 2%, it'd be £934 a month, and at 3%, it'd be £1,289 a month. And I think we can all agree that for an average home, i.e. a 3-bedroom house, not a starter home, this seems fairly reasonable. And I agree with Nationwide's commentary that this is very affordable. I completely agree. For an average home with 10% down, that's very affordable. Now, I think what's also useful is if we look forward and we go, okay, well, let's make some assumptions and see how that would come out in the wash if that was to ring true. Now, one of the assumptions that I thought would be quite interesting is what would house prices look like if 0.7% or 8.5% per year was the average growth for the next 5 years? Would that be unfeasible? Would that become unaffordable? So I did some sums, and Nick, if you put the compound interest calculator over there, you'll be able to see how that came out. But the figure was £372,335 would be the average house price in the UK, which would be a rise of about 127,000 or so. Somewhere around 127,000. Somebody will let me know that I got that wrong. But it's somewhere in that region, which is a big rise. But what does that mean if mortgage interest rates stay the same? Would that be able to underpin that new value and mean that it's still affordable? Because the reality is that property prices trade on a few things, and affordability is very much in that mix. So using those assumptions, if we were still operating in an ultra low interest rate environment, the new mortgage would be £335,000 based on the fact that it would be a 10% deposit, and you would have a 1% mortgage of £1,263, a 2% mortgage of £1,400, and a 3% mortgage of £1,900. So again, I don't think that's that unaffordable in 5 years, especially if you take into consideration 2 or 3% of inflation every year and wage rises and all the rest. So me, I'm in the camp of very much that an average home in 5 years could well be as much as £335,000. I personally think we're on track for some boom years. A lot of money's been printed, it's going to start sloshing around the system, there's going to be a lot of velocity of money as soon as we start to release all these restrictions. And me personally, I think it's going to flow into hard assets like properties, shares, stocks, funds, all those sort of things that are going to provide a return. Because interest rates are so low, there's going to be a bit of a squeeze, in my opinion, on yield, but ultimately it's going to mean that asset prices are going to rise. Obviously, this is just an opinion. I don't profess to be able to see into the future in any way, shape or form. I didn't see coronavirus coming. I bet you didn't either. But ultimately, what we do have to do is just make sense of what we believe is happening in the world and then create an investment strategy that works for us. So me, I'm still buying another property this year, maybe 2. Next year, I'll buy a couple more. The year after, I'll buy a couple more. I believe we're on for a strong few years ahead of us. I'm going to continue investing in property. I'm going to continue investing in funds, in businesses. I'm going to continue growing my wealth. But let me know in the comments if you think I'm right or if I'm wrong. Do you think a crash is coming? And if you do, let me know why. I'd massively appreciate it. And if you haven't already subscribed, consider subscribing to this channel. Massively helps me out. Also, give this video a like, and I will see you next week on Monday. Cheers, guys.